Hi traders, in this video I'm going to do a technical breakdown of gold. This is ahead of the upcoming US PPI data, so hopefully nothing has shifted the dynamic too much here. But we actually talked about gold in our recent live stream, and I did a commitment of trader report sort of breakdown on gold and had a little look at what the commitment of traders report was showing us. And the COT report was basically showing us that the commercials are selling gold. That is because the price of gold has obviously fallen recently, so commercials on the commitment of trader reports, usually they are doing sort of the opposite of what the market is doing. If price falls, they're buying. If price rallies, they are selling. Now, we did have a 6-month selling signal on gold around about this area here towards the end of December. What that basically means to me is that the commercials were selling at an extreme that has been seen before from a 6-month period, and we saw the effects of that. Usually what happens when that comes into play is obviously the market's supply and demand then becomes a little bit more sort of oversaturated, and the price of gold fell. It fell down to a key area of support, which is around about this 2019 level. In the live stream yesterday, what I looked at was where would price go to if it kind of broke through key areas. I also like to think in volumes. Now, obviously, there was a lot of volume down through here recently, which then produced a large rally in the market. We then found support in this area here. If we had breached this area and had a significant close below, I think that we probably would have gone and searched back down towards these lows around about the $19.75 area. That didn't happen. Price closed back above the $2019 area, and since then price has started to rally. We obviously had CPI data out of the US as well. That obviously led to gold pushing a little bit lower because the dollar got stronger off the back of that data. We know that gold can be a little bit of a hedge to higher inflation, so maybe gold is going to start performing a little bit better. Now, as the price of gold rallies, we should see the commercial contracts on the commitment of trader reports sell even more heavily. Now, that's what I think is going to happen. I think the price of gold is going to push up back towards this 2087 highs, maybe even push into the 2100 level, and then we're probably going to see an extreme being created on the commercials of the commitment of trader reports, which will then obviously lead to a potential bigger sort of downside in gold if obviously the market still features that heavily commercial selling at that point. But we are breaching key levels, so you can see we've breached around about this $2040 level. Depending on how the US PPI data could come out, whether it's good or bad, it could obviously create a little bit more of a push down if it's good for the US dollar in the short term, which then could lead to obviously a bigger move in the sort of mid-term here. And I think if we can stay above $2040 here, then price could push back up towards that 2100. So keep your eye on gold. I think this is a good market to keep your eyes on at the moment, with potential opportunities to head back up to that $2100 area. Thanks for watching this video update. I hope you enjoyed it. If you did, leave it a thumbs up and subscribe if you're new.